Good morning, everyone. This first of a series of video blogs that I plan to put out. Just general talking about the markets, technical analysis, certain stock buys and sells, and pretty much what I've been writing down on the blog on a daily basis, or weekly basis, should I say. Right, well, it's been a interesting couple of weeks with all of this Greek political tensions going on, worries about Greek debt, whether they're going to stay in the euro or not, and we've actually rallied a lot in a lot of these bond markets on the back of all of this. And just trying to look ahead. If we look at the Schatz right now, so if we look at the Schatz right now, okay, here I've got a 60-minute chart, and we broke this downtrend, and this was despite what happened during Trichet's press conference last week. And we came up initially on the back of strong vigilance comment, but then we rallied throughout the rest of the afternoon on the back of him being a lot more dovish than you would expect him to be. So looking forward, we've seen this range has been pretty much a straight line up. We've rallied about 50 fat ticks in the Schatz. Now, we're starting to come off a bit. I don't really see any support really coming in until we get to about 107.52, 107.47. This would be the 38 and the 50% retracement level. Also, let me just do a trend line here. See, it coincides with this level over here right now as well. So, I see this is probably where I'd see any type of support, and we continue our move back upwards. Right now we're in a small channel downwards, as you can see right here. Right now is on the top of the channel. We might get a small breakout, or right now temporarily, but I still think that we'll probably get down to 107.52 area before we sort of head back upwards, unless we keep on getting more bad news. But I think a lot of it must be priced in by now. There's been a big move up here, and we've passed the highs that we were a few weeks back. So that's what I pretty much expect to see in the Schatz. In terms of the Bund, similar type of picture over here. A bit range bound for the most part in this time period, but we have rallied in the last couple of weeks a good 160, 170 ticks. So again, we've started to come off from the highs, but I don't really see any real formidable support on this pullback till about 125.45, 24s, 30s. So I'll be looking for it to get around here before trying to go long again. Again, I'll be looking at the economic conditions, looking at the general state of the data, and general state of these European countries. But over here seems to be a good buy. So right now, if anything, I'll just be trying to short the push upwards, but with tight stops. So if I'm wrong, then it's not really much that I'll be risking on that one. So, going to the Euribor spread, my main bread and butter, I guess. So if we look right here, the whole yield curve, as you'd expect, has been narrowing quite a bit lately. All the Euribors have been going up, and obviously the front month's been going up more than the back months. So the back month's going up more than the front months, as you would expect, since they're a lot more volatile. And if we look at the chart of the June spread over here, you can actually see how much we've come off in the last few weeks. If we go on 120-minute chart, let's just say, and we're trading at 8s right now, but we've been trading as high as 16.5s, 17, 18s, 19s, and so we've pretty much come off 10 10 fat ticks from, you know, the highs that we had, you know, like like a month and a half ago. You know, I think it's now starting to establish a range in this area over here, but I do believe that in time we're probably going to re-enter this 10 to 12.5 range that we got over here, which it ranged in for quite a while. So, you know, I'd expect it to go back up there. I don't see much more downside unless they start thinking about cutting rates, which I don't think they're going to do. So, you know, I'll be probably looking, you know, I'm much more biased to the long side rather than short right now. So, you know, anytime it gets around here, or even if it goes lower, you know, I'll just be buying it, and, you know, I expect it to establish back into this range that it had a few weeks back between 10 and 12.5. Right, and I think it's pretty much a similar picture with a lot of the other Euribor calendar spreads. So if you look at the June 12, Sep 12, look at a chart of that on a 120-minute line, and yeah, it's pretty much the same type of story. It's come up about 10, 15, 20, 10, 15, I mean, yeah, about 10 ticks. Not as steep as the March, June, but it's still pretty steep. But like you see, we've sort of come into a new range between about 9 and 7.5, 8s. Although 7.5s haven't actually traded, but you know, you've been able to get 8s if you're lucky. But you know, I do expect it to go back into this range back up here between 9.5s, 11s, and you know, probably stay around here for a bit until, you know, anything fundamental changes again. So yeah, yeah, that'll be it for today, and stay tuned for the next update.